And I cross my fingers because I have a big bet there. But that's my expectation, how the junior market itself as a whole finally reacts to, like you said, these amazing metal prices.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault. My name is Shane Moran, and I'm thrilled to be your host for this episode. And from the entire Live from the Vault team around the globe, we extend a heartfelt thanks for your unwavering support. We really appreciate that. And as you might well imagine, our community is expanding week by week, and we couldn't be more excited about that. And we're in the midst of historic times, as you know, and today we've got the one and only Andrew Maguire in the vault. He's a precious metals expert and whistleblower, and he'll be joined today by a returning guest and by popular demand by you, our Life in the Vault community, and it's the one and only Mr. Peter Grandich is in the vault. That's right. He's in the vault with Andrew Maguire, and they're here talking gold and so much more. So buckle up. This is going to be an incredible episode. And, you know, Life in the Vault brings you exclusive insights and updates that you simply won't find anywhere else. And this episode is no exception. But before we dive into talking gold and also some silver with Andrew Maguire and his featured guest, Mr. Peter Grandich, let's just take a moment here to spread the word about our channel. You know, please hit the like button right now. You know, if you're liking this information, share this information out also. And don't forget to smash that subscribe button. If you haven't already subscribed to the channel, do so. And if you want to be notified as each episode goes live, just click on that black bell button there and we'll do just that. So, all right. So hit that like button right now. And without further ado, let me introduce our special guest, Mr. Peter Grandich. You know, he entered Wall Street in the mid-1980s with neither a formal education nor training. And within 3 years, he was appointed head of investment strategy for a leading New York Stock Exchange member firm. Now, he would go on, of course, to hold positions as chief market strategist, portfolio manager, and 4 hedge funds and a mutual fund that bore his own name. So his abilities have resulted in hundreds of media interviews, including, you know, way too many to mention here, but Good Morning America, Fox News, CNBC, Wall Street Journal. That's just to name a few. And with that, let's head over to the UK and talking gold with Andrew Maguire and our featured guest, Mr. Peter Grandich. Over to you, Andy.
Peter, thank you so much for coming back. I mean, I only just looked. It was actually late June. I mean, the end of the second quarter a year ago. And, you know, so maybe there's so much to talk about, but let's start with the elephant in the room. And I know what it is. We all know what it is. And I think when I look back at the price of gold, or not the price of gold, how many dollars it took to buy the same ounce of gold, more than the price. And gold was $700 higher than we were then when we spoke at the end of the second quarter of 2024. So, and now we're watching the $1,000 milestone, 3,000 crossed. Do you know what, Peter? This is not far from what you were expecting a year ago.
Well, first of all, hold on. I just wanted to hear if anybody from Wall Street was talking about gold at 3,000. Nope, not yet. Anyway, it's when they start talking about it, Andy, we may finally see at least a short-term top. But yeah, you're right. It's been an amazing run. When I think about you and I are old enough to remember being at shows thinking if gold could just get through $400, we'll be really, really well off. And here we are at 3,000. And what I like to tell people, if you don't mind, Andy, is that when I entered the business in the early 1980s, the Dow had traded for 27 years between 700 and 1,000. And in the early 80s, there was such a negative view about the future for stock market. There was a Russian U.S. could go off at any time. At that time, the Arabs and the Japanese were taking over the world. And no one could imagine the Dow going much higher when this man who no one knew of at the time, named Robert Prechter Jr., came out of Gainesville, Georgia to say that the Dow is going to 3,600. And people just laughed and scoffed at this young man because how could something go to 3,600? It's never even really stayed over 1,000. Well, not that it only get to 3,600, but it went to 36,000 and more. And so that mentality has always also been in the gold market. Gold's just, trades here. And these crazy kooks with the tin hat, foil hats and all this stuff, maybe it'll get to 1,000, but never. We also remember a certain guy that used to be out all the time that worked for a major internet bullion house that would tell us, are you crazy? It's never going to stay up there and all. And there's no such thing as manipulation and all. And even when it got to 2,000, even some of the people that were in the market, maybe not publicly, but privately said, do you really think it can get much through 2,000? What will drive it through 2,000? They're saying the same thing now about 3,000. They really are. It's the best kept secret, except for people like you and I that and some others who've seen it. And here's the last cherry on top of all of that. So you have these financial advisors, and again, Andy, I'm speaking just for the U.S. I don't watch Europe financial networks, but here in the U.S., they have talking heads on every day, and it's either stocks or bonds. It's all stocks, bonds, whatever it is, stocks. And I say to people, let me ask you something. If you went to a doctor and he gave you a drug, but you found out later there was a better drug you could have taken to make you better, would you be upset? They go, yeah. Well, those people that were telling you to buy stocks and bonds since January 1st, 2000, never spoke to you about gold, yet gold has outperformed both of them. Maybe you should look for a different doctor or a different financial advisor. And that's the real cherry on the top, Andy, of how well it's performed, despite being very, very underowned here in North America by retail and institutional investors.
Yeah, and it's not just this quarter that gold's outperformed. I think, Peter, almost every other asset class. And it's like, so these guys have to be waking up. And when they see, that they work as a herd, as we know, they always work at a herd. And gold was like, if you were in gold, you probably, the only chance of getting fired was the fact that you weren't doing what your friends were doing. Even if you all lost money together, you'd probably keep your job. But if you went into gold and even if it made money, you'd probably risking getting fired. But now it's impossible to ignore. So if you were a fund manager and they all follow each other and they suddenly going, well, hang on a minute, why am I not in this better acting asset class? Why would I not be in it? So if these guys, Peter, and I do speak to people out there, and you do, are starting to wake up that, hey, okay, 3,000. Again, they don't know if it's 3,000, 5,000, 10,000. To them, it's not even, it doesn't even register what the supply demand fundamentals or anything. They just see this linear thing going on. And I think they're jumping in. And if these guys come in, I mean, Peter, I don't know as a percentage what the average fund manager has in gold. As you say, it's probably very, very small. But if they even were to add some exposure and they all act as a herd, it's going to drive the price ridiculously higher.
Yeah. So Andy, first of all, it's a 0.5% is the estimate of what the typical portfolio in the U.S. holds to gold or gold related, a GLD or something like that.
Yeah.
That's what it's estimated at. Wall Street continues, and I believe will always continue to treat gold as kryptonite. It is kryptonite to what they make their living off of, stocks and bonds. And they don't have a way of churning it and burning it 8 or 9 times and turning it into different things. We saw with I call it Bitcoin, but I'll call it what they call it, Bitcoin for a moment. And we had the world's top asset manager who said 5 years ago it's criminal to deal with it. And then suddenly, because his firm came out and became the biggest trader of it, now it's the greatest thing since sliced bread. They can't do that with gold. They haven't found a way to flip it, spin it, and derive and keep making money off of it. And what will happen, this is what I believe is the outcome. I'm hoping, obviously, because I have such large and continue. I mean, I literally told people as a financial service person in the United States in 2021 that I would liquidate US equities and just own gold, because if you want a capital appreciation, forget all the other reasons, war and all that, it's going to outperform stocks and bonds. I don't think one out of 50,000 of my peers would have done or said the same thing. But what I think is going to outplay is, mind you, in what you rightfully pointed out about the herd mentality, as this market is rolling over, and it is, the air is being let out. It depends on how sharp and how much air comes out at once. And the Magnificent Seven aren't as magnificent as they were. And I want to talk to you about passive investing because it's a critical factor that most people don't know about. But as that happens, as the cryptocurrencies, because remember, NFTs, remember a few years ago, everybody and their mother, they're down 95%, Andy. They consider that industry completely dead. There's no hope of coming back. Mem coins, where a lot of, again, money went that would have gone into gold, blowing up all over the places. And now finally the cryptocurrencies, especially the big name one, I've said that it's reached its peak. I've been anti on it since it got above 70,000. I don't think it's getting back above the 110, but nevertheless, the rollover of that will suddenly have these managers looking around and seeing not only gold's actual performance, but the companies that mine it. Andy, they are making record cash flow. They're literally printing money. And think about this, like you just pointed up, it went up $700 or from 2,300. That's 30 something percent since you and I last spoke. The expenses at the mining companies didn't go up that much. So that's that much more profit. As the regular market that they're looking at is rolling over in their herd mentality, and all of a sudden they start seeing, hey, these gold companies are making all sorts of money. That's where the herd mentality will come in and all. They're not even putting their toes in the water yet.
And Peter, you're very active in the mining space, the juniors, etc. And I think so and obviously the one thing, and I don't specialize in this at all, but I do know that we get a lot of feedback from people who say, look at the gold price, silver price even, but look at the gold price. What's happening with these guys? Why are they not rallying for exactly the reason that you've just said? It's crazy. And so we see such very strong demand for physical gold in the wholesale space, it just boggles me at how undervalued that these guys are. And so you specialize in these juniors. Can you just pick your brains a little about this subject?
I'll be more than glad to answer, because I've made the biggest bet of my life on them, especially now that I've reached to the low end of the totem pole into the junior market. Let's first start to distinguish and separate. The upper echelon major producers, the big household names, are doing okay. They've done very well, especially in the last year. It's now gotten down to the mid-sized type companies, and we're seeing them move. The problem with the junior resource market, and I guess the reason you don't hear this, because the people left in it make a living out of it. I don't make a living out of it. My main, or what's left of my livelihood, is a financial planning group, which really doesn't touch junior resource stocks, but I still love it and talk about it. I have a blog sponsored by some juniors, et cetera, et cetera. But here's the challenge, and why people can at least have a plausible excuse why the market hasn't done what they had hoped it done. The junior resource market, Andy, even back to when we last met in London in the early 2011, I believe it was, 10, 11, that market then was bigger than it is now. There are less players, less money, and much more difficulty for juniors to work. And let me explain that. Maybe at that show, we saw the top to what we would call a gold broker or a gold financial advisor, where he or she built a book of business, either all their business or part of their business, buying and selling mining stocks, including the juniors. That died when commission business died. There are no one, because there's no money to be made in it, except unless you do it under a management fee basis. So all those people that used to make a partial living or a complete living, they went elsewhere. At first, they went into the marijuana stocks, and they went into crypto. You cannot believe some of the old faces that I remember that used to be around the junior market are now crypto authorities, because that's where the action has been. It certainly hasn't been in the junior. The institutional desk, man, there used to be, even in London, I remember the old London Gold Show at the brewery. There were a dozen mining desks that existed in London and the surrounding area, United Kingdom and all, and then go into other Europe. There were another 30 or 40 name groups, well known. Now, if there's a half dozen, maybe. So it has been a great industry that has, a little industry, I want to say, that's shrunk even more. And then on top of all of that, and making it so much more difficult for a junior resource company now, because that gold broker used to put 50 to 500 of their clients in one of those stocks. Now that same company, even if all those people still exist, which I don't think they do, they have to reach them almost on a one-by-one basis because they don't have that intermediary anymore. But the coup de grace to all it is twofold. One, regulatory. Here in the U.S., even discount brokers now are not allowing their clients to buy juniors that trade on a Canadian exchange, even if they have an OTC symbol. And on top of all of that, regulatory is killing the industry. From an initial discovery to finally when an ounce is poor, some say it could be as long as 29 years. Who wants to put up money for something that's going to see a return in 29 years? And the good news of this tariff thing and all, and this critical minerals crisis that's going on in the world, it's making these governments wake up. Canada in the last 6 to 12 months has done more to help the mining industry than they did in the previous 40 years of my career, because they have to. So it's an excuse. Doesn't mean you get away with it if it was something that you believed in and all, but that's what's held it back, Andy. And that's just starting to loosen. But they're the last ones to go, because here's what's developed, Andy. The majors, their stock prices are going up. They have to replenish those resources. They're going to use the price of their stock to go out and do deals. Why go into grassroots exploration themselves when there's ready-made projects out there that are selling for as little as $10 to $40 an ounce of gold in the ground, and gold's over $3,000. So the next big part will be M&A, not only among themselves, but reaching down to the junior market. And that's what will finally light. And I cross my fingers because I have a big bet there. But that's my expectation, how the junior market itself as a whole finally reacts to, like you said, these amazing metal prices.
So you see a big M&A sort of activity now kicking in, because it seems to me it's a no-brainer.
Yeah, they're already doing it. We just had the big mining conference here that takes place in Toronto. We just had before that the big institutional conference. And from what I gleaned from some of the highest players that I still have an opportunity to talk to, the majors are all set. They're figuring out who it is. They've had their talks and all. And I think there's going to be a significant merger. We already saw the talk recently of Rio Tinto and some others. I think there's going to be a big merger in Canada. I'm speculating Anglo Eagle and IM Gold are going to come together. And just that in itself. And this is going to hopefully coincide what we just spoke about earlier, the rollover in the markets, the crypto, and suddenly it'll have that window. But what we learned after 40 years is the window in the juniors on the bullish side is a lot shorter than the bearish cases for it. So we can't get too caught up with it. And when we start to hear from non-mining people, it's time to buy juniors, instead of encouraging them, we need to start looking for an exit, but we're not anywhere near that yet.
So that kind of brings to mind what's going on in Canada. Now, obviously, you're exposed to Canada, and you have been. I know you've been involved very much with Canadian exchanges and one thing and another. What's this? I mean, obviously, you've got Trudeau out, you've got Carney in. To me, Carney, he was used to be the bank, governor of this Bank of England at one point, really very suspicious of this guy. He's one of the Goldman alumni. I mean, I guess every central bank around the world has a Goldman alumni somehow heading it. Actually, it's a slightly different thing in the UK for the first time, where you got somebody who wasn't. But so what do you think? Is this guy going to have? What's he going to do for Canada? Is because obviously Trudeau was about the most woke, the scariest individual that, and what he did to Canadians. And I've been involved with Canada a long time myself, and I've got kids and grandkids there. So I'd just be interested to know what your thoughts are. This guy is going to do good, do bad? What's he going to do?
Well, first of all, Canada was my home away from home for 25 years. I spent a lot of time at conferences, visiting companies, doing their financial network on a regular basis. I'm a big fan of Canada. I love Canada. I so regret how this president of mine has gone about this in this particular case. But one of the things that will backfire on him is that Trudeau was not only going to be out, but the conservatives were likely to win. And now I think that has changed dramatically. But having said that, I will tell you that while Trudeau and Biden were both in charge, my line simply was, if Canada and the United States each exchanged their leaders, each side would think they got the short end of the stick. I mean, it's a race to decide really who was worse for their own country, Biden or Trudeau. I give the edge to Trudeau only because of it being smaller and he had more influence than, it looks like Biden in his last couple of years was literally a puppet, that they even had these people signing stuff for him and everything. But nevertheless, what has happened, and I think this is one of the things that's going to backfire on Trump, and that is he elevated the better chances now for the liberals to stay in control. Even though I think this man, I mean, he made a talk the other day. In 4 minutes, he couldn't get 6 words together at any one time. And so who knows what his real scenarios, and he has a very checkered past is the way to put it back. But, Canada is in as much, if not more, trouble in the similar things that we are, financially, immigration. The one thing that I always said that they had going for them that we didn't, they had an abundance of natural resources and minerals. And but I think they have as much, if not more, of a challenge. And that's why combined here in North America, when you think that we're still the 2 biggest trading partners, you would have hoped. And this plays into my belief, when we talked last year, that one of the major reasons to own gold is the continuing formation and growth of the BRIC nations. I think Trump's, when he first came in and said he was going to basically break your kneecaps if you joined the BRICS or try to trade, I think that's going to be his biggest backfire, because behind the scenes, they're taking that comment and all the other things that's happened dealing with the United States and go, do you really want to deal with them? And so they're smart enough not to get into a battle of words with him, because you can't win a battle of words with Trump. That's no one's going to win that. But I think that's going to come back to hurt him. So Canada has a big challenge ahead, and it hurts me. I still have friends. I know a lot of my followers are from Canada and all. And this is 2 countries that have really stood side by side in the difficult times in world wars. You can travel on either side of the border. It'd be very challenging many times to know you even crossed the border, because there's so much similarity and all. And I just hope that this is, my strategic planning has taken this into account, that Trump is more blustering about tariffs than keeping tariffs on for 12 months or 24 months and all. I think it's a negotiation ploy of his. And I hope that, but Canada has a lot of work ahead of it, just like the United States and much of the Western world, Annie. And that's the other reason, one of many, why the gold market is doing what it's doing.
Yeah, the uncertainty and the safe haven nature of it. And again, it's not even that, Peter, I know we look at it in the same way. It's not even that the ounce, the kilo, the ton of gold is going up in price. It's just taking more dollars, euros, pounds to print to buy that same piece of gold. And I think a lot of people don't understand that. And really, so I don't believe any of us actually believe gold's going up at all. It's just really telling us, look at the debasement out there. And I think that kind of raises the question, I think, because one of our main objectives, and I know this is true, in providing these educational podcasts, for example, is really to focus on wealth protection. And the last time you were with us, you actually gave 5 key reasons to position oneself to protect your wealth. Is it possible for you to go through these 5 reasons, Peter? Because I know it was well received last time, but we got a lot of new viewers.
Sure. So the change in our administration in Trump, there were actually 10 factors that I talked about building an arc when you and I last spoke. 2 of them he was able to turn into the good column. Our immigration and our wokeness DEI, which was out of control, clearly is becoming controlled at this point while Trump is president and he's able to be doing some of his things. But I think there's 3 huge issues for America. And I don't think Trump can overcome them as good as if you want to believe his intentions are to do that. The first is one that you and I have been talking about for as long as we've known each other and before that. And that's the continuing usage of debt. Debt is the dirtiest 4-letter word. I've been telling people it may be the main reasons why whoever created the Bible, I believe it was the work of God, but whether you want to consider it just a good book that was put together by humans or inspired by God, it's the most negative thing is talked about from a financial standpoint is what debt can cause problems for mankind, which it has. And the problem is there's no sign under Trump that that's going to change. In fact, he has a history of making debt bigger, not smaller. And I really think, and this is controversial too, but I really think Elon Musk is being serious. I mean, I think he really believes in what he's doing. I mean, he didn't have to do this. I mean, if I had a few $100 billion, I think I could be doing something else than spending my time in this stuff and watching my dealerships being burnt down to the ground because I took a stance or something. But the debt and deficits is still the biggest issue. And they still don't want to talk about the third rail. And the third rail is our entitlement situation. People estimate that entitlements are double, if maybe triple, what the current national debt is. And so it's just BS, if I can just put it that way, to talk about Bitcoin or whatever it would be, even gold, can somehow just make it a reserve and it will make the debt go away. It's an impossibility. We're never going to be able to pay that debt back. How do we make excess cash flow? We got 65% of Americans working paycheck to paycheck, Andy. How do they make enough more that you can tax them so you can start reducing this debt? Because that's the only way the government can do it if they really want to approach it. So debt and deficit is the single biggest problem. But the 2 others that don't get spoken about, certainly in our financial media, and this one they don't because it's the bread and butter of Wall Street. We have a retirement crisis in the United States. It's severe. Like I just told you, 65% of Americans are working paycheck to paycheck. 62% of Americans don't even have $2,000 saved for emergencies. And these are people that are getting older. And now someone like you and I who've reached, let's say we're on the other side of the mountain trying to hold off to get down to the bottom. It gets more difficult as we get older to work day to day and all. And yet many of them are going to have no choice to, and they will call on the government to help them more and more. And so that's a huge problem. And then as a part of that's a problem, Andy, is that there's going to be a battle of the ages. I'm 69. I'm on Medicare. And let's just say Medicare still exists 10 or 15 years from now, which it may not. And if I still exist. Well, if I'm 80 years old and I want to suddenly get a new lung or whatever they're doing at that time and it's costing hundreds of thousands, there's going to be a 35-year-old kid that's struggling to put food on his table who's being taxed at death is going to say, wait a second, this guy's 80-something years old. I can't even put food on my table. No, I'm not paying my taxes anymore. changes. There's going to be a battle of the ages. It's not today, but down the road. But the other two that America has not recognized, we've had some periods to see it, and that is our infrastructure is crumbling. Back in 2008, when Obama and Bernanke got together to bail out the banks, they used the fact that this money was going to be used to repair our infrastructure. It went into banks and never got out of the banks. But it's an infrastructure crisis and a natural disaster crisis. In recent times, I don't know what you see in Europe, but I'm sure you saw what happened in California with the fires and all. You've also might have heard what happened in the Carolinas. But we're having here, like in the state of New Jersey, on 3 highways now, they've been closed for a month and a half because we had these sinkholes and all. There's so much terrible. We have 100 bridges in New Jersey alone that have been condemned and been urged to close, even though right now people are driving over them. So these are issues on top of a lot of other things that make me very, very concerned that there's no easy solution to solve it. And anything that is going to be solvable is going to take a generation or more. I won't live long enough to see those much better days if they ever come, Andy.
Yeah, and the other thing that I think that, mate, as soon as I thought of you, I remember this. 9 months ago again, in the way back then, and this is long before there was any kind of talk of recession, you made a compelling case that the US was headed into a recession. And I think at the time you had indicated that a massive, I think it was 85%, of those surveyed at the time were very concerned about economic slowdown. This seems to be coming together. I mean, that was 9 months ago, and when everyone was just chasing that momentum. So interesting, because you were talking about this 9 months ago.
We're seeing now. From the Biden administration, there was a lot of smoke and mirrors used. We saw once he was gone, the employment numbers that come out once a month are more realistic. They changed them by 1 million more people unemployed. So that perception, we're seeing the best way I like to describe it is there's 10 or 15% of Americans doing very well. Part of it is their wealth. Part of it's being tied to the stock market. Part of it is that they're, major business owners and all. And then down to, say, 60% of Americans, they're just getting by. But they're doing something fatally mistake that I wrote about today in my own, and that is they're living beyond their means. 7 out of 10 families that walk in to see our financial planning group at all levels of income live at least one lifestyle or more above what their income is. And they do that through debt, deferring, not saving for the proper things, very expensive cars parked outside that they could have saved money and just get a car to get them from point A to B. No money for retirement, deferring fixing the home, a lot of issues. But then there's the real lower end working class, lower to middle income. It has become so tough for them that 2 things have become paramount in the United States. One, the amount of people online for food at pantries has increased dramatically, and most among working class Americans, not people that were already in a real difficult point and living off of assistance and all, but literally 2 family working places. And I'll just give you real quick. My wife and I are very involved with one local by us, and they've seen in a span of 5 years going from 450 families servicing each month to over 4,000 now. And half of them are working people, 2-class working. In fact, the sadness is a couple of people on that line 5 or 10 years ago were volunteers, but now they themselves need the help. But the other thing that has gone is that lower echelon, almost half are using credit cards to pay for just day-to-day living, gas, food, what have you. And that's going to run out, because even if you make the minimum payments, but you keep adding on hundreds of dollars, of course, even the minimum payments can't be eventually met. And that's why we're seeing credit card delinquencies rocketing up. Car companies are having difficult time. 2/3 of people that own cars are upside down. The people that have taken loans, they owe more than the car's worth. Now there, it's easier to walk away from than your home because you can just, okay, take the car. But then, your credit comes problem. But it's very, very challenging for the bulk of Americans. I don't know. I hear that it's similar for Canada. I hear that there are other places, but I can tell you firsthand here. And Wall Street doesn't take that into account. They have like these blinders. And when they speak publicly, where that other large percentage is listening to, it's because they're only involved in that easy world that they're living in. They're catering to these very wealthy people. But the wealthy can never bring up enough people to change that. Eventually, the stress from this caused some of them from the top to come down. And that's what's happening. And there's nothing on the horizon. As much as people feel, a certain amount of people at least feel better that with Trump, more law and order and things that morals or whatever may be better, the financial end of the issues have only gotten worse. They've not gotten better.
And I think one thing that's a bit scary as well is when you think a lot of these fund managers, I mean, they were in university like 20, 25 years ago. I mean, these guys have never experienced a real problem, a downfall. They wouldn't know what to do. They only know that it's easy to keep buying the dip, buying the dip, buying the dip. It's worked for them, but there comes a point, and I think there comes a point where there's so much debt in the system now that people are questioning. I mean, for example, right now, when gold, step back 1 second here. When gold was reclassified as a first-year asset class on the 1st of January 2023, Bank of International Settlements made it so, meant that the FX markets, if you were to provide liquidity into the FX markets, and you would better have that gold. So it would better be physically deliverable on a T+1 basis. So that, now I've spoken to a Swiss pension fund. I've heard of the UBS trader, head trader there. He's got like 1.4 trillion under management. Both of these people have said, what we're doing is we're actually selling some US treasuries for gold. And it's interesting because that's never been the case before. And until it was classified as a first-year asset class. And therefore, then to me, then that is the only, so physical gold then has zero counterparty risk, but a US Treasury actually has some counterparty risk, does it not?
Yeah, well, let me first answer that, and I want to go back to what you talked about, lack of what I call experience. It's interesting that the change at the Bank of International Settlements coincided with the absolute blast off of central banks not only becoming huge buyers of gold, but 30-something of them repatriating their gold from the United States and London. That's all because we both know that something in the future will take place where gold is going to be used either in regional things like the BRICS or worldwide, but eventually the dollar will be replaced. But I want to go back to what you brought up, if you don't mind, Andy, about the experience, because that's one of the 10 things that I spoke about last year, and it's still on my list. So hard to imagine this, but almost now close to 50%, it's 40-something%, I don't remember the exact number, weren't of licensed financial advisors over 350,000 or close to 400,000 in the US. Almost half of them weren't born when I started in the business. And less than 40% were in the business before January 1st, 2000. So they basically have learned to drive on a one-way street. A one-way street that had a couple accidents, roadblocks, whatever. And then this tow truck called the Fed came along, the Fed threw a bunch of money at it, fixed the road, and hey, step on the gas, go forward. The problem will always be, as I've always said, is what do they do when they start to see two-way traffic for the first time? Or worse yet, a roundabout, or what we like to call a traffic circle. I think they're going to have a big problem. And that coincides with what we said before about the herd mentality and all. And so that's the big issue out here, I believe, in the US, the true lack of experience. It's an amazing thing. They have no concept of a bear market. And I think we flipped 180 degrees from what I told you in the early 80s. No one wanted to own stocks back in the early 1980s. No one. That's why it was so poor for so many years. And now, of course, everybody and their mother was at the point where they were owning it. And I just think, things go in pendulum swings. So that's a big concern. But your point about the BIS, and listen, this is why I tell everybody when you only got a minute or two to talk to them about gold. They made gold as important as stocks on a world basis by the central bank's banker. I mean, you're more qualified to comment on that, but a lot of people like to say the BIS is the central bank's banker. Why did they do that? These banks aren't buying this for a trade. All this enormous known physical buying, which we think there's been more than the actual reporting, especially out of China. They're not buying it for a trade. They can't trade it to somebody else and lock in the profit. They're buying it for a significant reason. Okay. 2, we saw the BRICS. We understand they're going to come up with some sort of formula to settle their trade using gold in some fashion, along with currencies or something else. We don't know what the final thing will be back. Then we had all this repatriation. But now, Andy, I want to ask you a question in this interview, because you're one of the foremost authorities in my book, my friend. Why did all this gold start to get transferred? And why would the president of the United States, unsolicited, start talking about whether or not there's gold in the Fort Knox? I don't understand any logic in that if there's any question that it's not there, which some of us believe may not be, or to the point of the level that has been reported and all. And so all of this and this transferring of the gold and the president talking about, the secretary, treasury talking about it and all, gold's going to be used some way more than it's been in the United States. There's no question about that's coming as well. So it's all green lights. I can't, if I wanted to try to come up with a reason other than this, we've had a big move. We went from 2,000 to 3,000. We could have a 10 or 15% serious correction at any time, but maybe that starts at 3,500. It doesn't start at 3,000. But I can't come up with anything for a long-term change of opinion on still why gold needs to be a significant part of one's portfolio. I just can't. It's hurt business, just so you know. Most people that I meet from the financial planning, they don't see that concept. They don't have the time or the knowledge to have the deep thinking that you and I do. So when they go down to the street to talk to the apples and orange, I'm Apple, they go see what orange says. Orange blows up gold. And that guy's a nut, whatever they come up with. But by and large, there's nothing yet to even be mildly concerned that we've even reached an intermediate top. Yeah, there's short-term tops. There's going to be sharp corrections in bull markets like this. But this market still looks like it can still go substantially higher. And Andy, I used to say maybe we get to 2,500, 3,000. And there were guys that talked about 5 and 10. And I would say, maybe they're a little crazy. They're not that crazy anymore.
Absolutely, Peter, absolutely. And I think, I kind of to answer your question, I think when the Bank of International Settlements, which is European facing, global south facing, diverged from the only central bank. There was only one central bank yet still trying to protect the dollar value of gold, which was the Fed, of the US Treasury, the Fed. So, and so really you had this split of central banks. And so now we've now got, and they were given, and this is the interesting thing, and not people are talking about this at all, is that they were given 2.5 years to comply with Basel III standards. Now, that means on the 1st of July, 2025, technically gold has to be deliverable on a T+1 basis on the COMEX. Well, in the USA. Now, well, that simply means that you're going to have to stump up full margin for the product, otherwise it's not a first-year asset. So, but I think what's interesting, as you've raised it, is that yes, they're going to do something with gold now, but we know that there's empirical evidence to say that while the gold may actually be there, and I think Besant comes on and says, I can invite anybody to come and see the gold's there. Yes, but how many ownership claims does it have? And I think that's, yes, it may be there. It would probably be there. It may not be in the same form, but we're seeing a massive repatriation right now ahead of July the 1st. I think that's what we're seeing. And so I think I was tracking from 2000, March 1st, 2024, when the Shanghai Futures Exchange launched a physical exchange and started to suck liquidity out of the paper markets. My goodness, Peter, to have to sell a bar in China, you have to own it first. It has to be inscribed with your name, actually marked in your name, before you can offer it for sale. So what's happened is, and people were saying, "Oh, it'll just come right back down." All the mainstream analysts said, "Yeah, well, yes, it'll go up and it'll pull back." $800 later, it hadn't pulled back because the buying was insatiable. And I actually believe China strategically launched that. The Shanghai Futures Exchange, knowing as a physical exchange, knowing that this was a time to bolster reserves. And they've many times said in the past, 2010 and later, they've said, buy gold and you won't lose money. What does that mean? It means that if they have to pay $50 more for an ounce of gold than is priced in the paper markets, so be it. Because when you're a Chinese person facing the market, all you do is you see your gold going up, which is what it should be doing. So, and then that underpinned, each time that happened, it was up long enough to have the physical market say, okay, if that's the price, we will pay it. And so then step by step, it just couldn't pull back. And it's still going on.
Yeah, and it also killed the gold hangers, the shorters and the COMEX, the CRIMEX, and dead days are numbered because you can see it now, even when they manage, and there might have been 3 or 4 or 5 since you and I spoke, where we had $50 down days or 60. 15 years ago, that could last weeks or months. Now it lasts hours, maybe a day, and the market comes back. That's because of how the real demand and trading over there. But you know, the other interesting thing, Andy, they showed a few weeks ago what a typical weekend in a mall in China was. It's just people shopping for gold. While everybody here is shopping, spending money that they don't have to buy stuff that they don't really need, Chinese are buying gold. And like I said, I told a couple that I spoke to last night that had young grandchildren. And I said, listen, I'm very serious. Start to teach them to learn Chinese, because 20 or 25 years from now, at best, they're going to need to learn how to speak it. It will be at least the second language, if not the first in the United States.
Mm.
You have to remember this, and maybe close on this, and that is, no country ever stays the world power forever. I mean, look what the United Kingdom was at one time, you know, and the United States is no longer, and Trump is right in this respect. To stop saying, listen, we should not be the world's policeman anymore, and we can't be involved in these wars. Wars are not doing us well. How much money did we spend to send over to Ukraine, and then how much are we going to spend to supposedly fix it up again? It's just, and this is the thing that I don't know where it's going to be, and it'd be interesting in a month or two what kind of a conversation we would have about this. And that is what Musk has been able to discover in a matter of weeks of how much pilferage, which could be in the trillions, and from both sides of the aisle. This isn't just some Democrats doing this stuff. It could be the difference of why we were having $2 to $3 trillion deficits a year. And even if he discovers it, will there be the willpower or the ability to stop it? I mean, to really end it. And that you're talking about cutting off a lot of people that were on that gravy train. And those that are on the gravy train says, you mean if we just kill this one guy that's taking a shot at us at the gravy train, we can still have our gravy train? I tell you this personally, I just say this personally, I don't mind sharing it on yours. I fear more for Musk's life right now than I do Trump's.
I know that your views on your faith has been a powerful guide for you. And I remember we talked about it offset wokeism, it offset many things. I find it very refreshing. And that because there are very few people that talk about their faith, and you very much are. And I know that I saw something recently. You said you're in the middle of Lent, and you're doing a lot of reflection and one thing or another. And I think that's really, really refreshing because it keeps one's feet on the ground, doesn't it?
Well, it's an interesting thing. If you give me a minute or two, I'll just describe it in a nutshell. So there's this book. So people rave about some financial book. Oh, did you see what's his name? He put out a book, and you go to the bookstore and there it is right on the top of the shelf. But a couple of years from now, that book has moved down to the lower shelf, the on sale. And now there's another person with the greatest answer to finances and all. When in fact, there's been a book that somehow for 2,000 years managed to stay around, be among the best sellers of all time, and talks more about matters of finance than even what you think the two subjects that they would talk more about, heaven or hell. So I approached it looking at it just, hey, listen, whoever put this book, now I happen to believe it was inspired by God, but even if you just want to say just somehow mankind got together and came up with this stuff, they were bright because they hit on, when you look at the matters that relate to finance, half the parables do, they are great advice, better advice that you could give than anything else possible. And of course, its single biggest concern it had was debt. There's not a positive word or verse in all of that book. And sure enough, debt is the single biggest problem we have from a financial standpoint in the world. So the book became a center point. Now, speaking about it, tying it to finance, let me just tell you this, Andrew. It's not a moneymaker because you only get described three ways. I'm either a charlatan, I'm just using it to somehow profit. I don't care what you believe in. Can you make me money? Or the smallest amount of people I meet, but the most enjoyable is, man, I'm glad I found you because I, like you, believe that. And I think we should try to practice that way and all. And part of that is being faithful in honesty. And, you know, I talk about things, I share some of the most personable things that have happened to me. And not good. You know, I tell everybody, not that I only lose a lot of money once. I did it twice. I've struggled with anxiety, high anxiety and depression. Yesterday was the toughest day in my life because 3 years ago, I lost the absolute best friend I could ever have, who happened to be a Catholic lay evangelist. And my Protestant friends always go, that's an oxymoron, Catholic and evangelist in the same sentence. But the bottom line is, I share some of the most intimate and personable things that I've experienced in my career because I find that they play a role in our everyday life and should be spoken about. But 20 something years ago, when I formed my sports company and was a Christian-based sports company, and I went to the company that I was working for, he said, listen, you could put a rock on the door, you can put a bull or a bear, but you're not putting God's picture on the door. We don't talk about God and money on Wall Street. And really, if you look around, there may be a lot of independent people that are working in a strong Christians or Judaism or whatever faith that they find them in, but there's no active financial service firm that's beating its chest about Jesus and money. It's frowned upon. And so it's been a uniqueness and it's challenging at times, but it also has unbelievable rewards. And at this point in time in my life, there's no way I would reverse it, even though at times it causes anguish. Some of the nastiest commentary that's ever been said about me is regarding my faith in finance. So, and I know where that comes from. I know who's saying that, who's leading those people to say that. And that's the battle. And if I may just close with this, I don't think that the problem is any one human. I think the biggest problem, if we got to the core of everything, is that this is a battle between good and evil. It's been going on for a couple thousand years. And the weapons that each side has, but particularly the enemy side, are vast. The internet especially has created just an unbelievable weapon to turn people away from those that believe as I do. And so it's a battle. And I don't think you can survive the battle unless you support this belief that I have. But I don't force it on anybody. I don't believe it. I have any right to say, well, if you don't believe this, you're not going to heaven or hell. I say to people that God will judge each of us. And no matter how many rosaries I might have said, if I'm still committing some of the other sins, it's not going to matter how many rosaries I did and all. But so you're right. And I do feel, especially now at this point where I don't worry about making a payment or anything of that nature. So if someone doesn't like it, they don't like it. So
I think when you have faith, it's your shield, it's your armor, it's your light, it's your strength, it's your sword. It is what it is. And then you just mentioned you had a sad day yesterday. remembering your friend, but you brought him to mind. You brought him back to life. They live on, don't they? God lives on. Your friends live on. Your parents that have passed away, live on. As soon as you bring something to mind, it's amazing to me because it's there. It's real. It's as real as it can be.
So, Andy, I learned a lot of things from this friend that passed, but one of his best sayings is probably one of the backbone to the practice. And he liked to say, and I still say this to other people, there's only two types of people in the world: those who are a mess and know it, and those who are a mess that don't know it and don't want to know it. Thank God if you recognize you're a mess, because you're halfway to victory. And I recognized I was a mess years ago. And thankfully, with God's help, it's been sustainable. And hopefully when the book of record comes out, there's more in the win column than in the loss column.
Well, bless you, Peter. I think this is a lovely place to end this really, really more of an educational. These are just about education. It's about wealth protection as we start.
Well, I don't like one reason talking to you, Andy, because now I want to go back to London and see you. So
yes, please.
One of the best nights I ever had in my entire career was with you and a bunch of other guys. It was the single greatest conference I was ever at. I can tell you that, from joy and having my family there and all. And I know London's changing. It's changing a lot. But if I was going to come back, you'd be the first person I had to see.
Peter, it's a date. Absolutely. Please let us know when you are coming. We will make it a very special occasion. But thank you so much for joining us today and sharing your heart with us as well as your knowledge. I appreciate that so much.
And I do it, Andy, because you're a man that does the same. I don't need an extra interview these days, but I enjoy so much speaking with you. And people need to know how critical, and your viewers probably know, but anybody that's watching this, how critical you are to uncover the nastiness that was happening in the metals market. And much of it changed for the better because of the work you did. And so I honor you with that by speaking with you. I really appreciate it. And for all those that bet on gold, we owe a little bit of a tribute to you as well. So thank you, my friend.
Thank you, and bless you.
Thank you, Andrew Maguire and Peter Grandich, for another fascinating discussion. And to our entire Life in the Vault community, remember to buy physical and understand the difference between what Andy calls the casino, paper gold, and silver markets. And the actual physical gold and silver markets, they're not the same, and don't be fooled. All right, so there you have it. That's all we have for you today on another episode of Life in the Vault. And please help keep spreading the word about this channel by hitting that like button. Hit it right now if you haven't already done so. Go ahead and hit that like button. Share this information. And also, if you haven't already subscribed, you can do that. Now, if you hit on that bell, the little black bell button there, we will notify you as each episode goes live so you don't miss a thing. And with that, we'll see you right here next time on Life in the Vault. We'll see you then.